Welcome to Trading Lounge and the US indices for the 15th of December. So we'll start with the Nasdaq, then go through a few Nasdaq stocks and then look at the S&P. The Nasdaq seems a little bit more chirpier than the S&P, but as I mentioned before, this third wave that we've got going up through here is not really displaying the power that a third wave normally has. So it does raise alarm bells as such. But as I've kept on saying all the time is that the market in its own way seems to just continue to creep higher. But this sort of slow creeping business gives me the creep. So it could drop at any stage, and we've seen this weakness once we've hit the 500 here for this particular market. But we'll just stay with what we're doing, and we have been looking at different counts, and we'll continue to do that as well. I think it's important to in times of uncertainty, have a look at other counts, and also it comes down to basic support and resistance to me as well. So this 12,500, the 12,000 is not such a big deal, but the 500 that it's associated with is the level that we really want to see here as the support. And we know that in approaching a large number, we always pretty much get a sort of some type of corrective pattern there until the market can establish itself as the support, and that support gives us the confidence to place stops under that support and then move higher from that point. So this is the count that I've got for this particular market. Sure, I understand there's other ways to count it as well. The structure to the upside is still intact as a bullish market. We do need to be mindful that this move down through here is an impulse wave to this point. So this little area here, as we looked at yesterday, needs a little bit of discussing as well. But I think it's pretty much on track for pushing higher in this regard. So let's just go in. I'll just cut straight to the hourly chart on our count that we've had here. So we've looked at this as being wave 1 here and wave 2 here, and then moving up into wave 3 here. But as I mentioned, it's probably the wrong count, because this wave 3 is not really powering to the upside. It is creeping, and we've taken advantage of it at certain places, and we're looking at it as 1 and 2 here, and 3 here, and 4 here, and looking up for wave 5 here. This little yardstick that I've got here, that's the length of wave 1 here. So we would need to see the length of wave 3 here move beyond this length here for this. So it's just another little thing that we need to keep an eye on. So we would need to see wave 5 come up into 13.2 or something of that nature. Yeah, so the other way to count this, just before we go to the intraday here even further, just on the 4-hour chart, we could look at it like this too, in a series of 1s and 2s here, and then 1 and 2 here, and then this 1 and 2 here, or the other 1 and 2 here in that case. So there's different ways that we can look at it, and I'm aware of those. But I think just one step at a time. If we get support on this level here, then I know that we'll be pushing up to the next level, which will be 12.8, and 8's a profit-taking number, so we're going to see the bids being hit there as well in that instance. And we can also look higher to that point too, but there will be, because it's creeping, we'd need to find where the possible resistances are. So that's coming into group 2 here, 65, 72, and the 80 here, the 800 in that case. So can we see more downside to this particular pattern here? Let's just go to the tick chart and have a look at this little area here like we did yesterday as well. So let me just bring in a bit more data here. So don't worry about which count it is at the top there, but that's the top. And this move down through here, it's quite clear to see it as, well, in my view, it's 5 waves down through here as an impulse wave. Normally we could look at this as the A wave here, the B wave here, and a C wave here, because we got 5 here. But also just tucked in here, I find it difficult to call this a B wave here, because it's got a very nice down for 1, ABC for 2, down for 3, ABC for 4, and then also another little 5 waves here. So it's possible to call this an A and a B and a C here. Now, as I mentioned, we can look at this as wave 4 here as well. There's different ways to view this. So it's possible that even though we haven't quite made a new low here, we may have done, because that's a bit of a spike here, but even so, we've seen this type of things before, where this length here would be roughly 61.8% of this length here. So that's all good. From that high to that low here, that's the 61.8% back on the 500 area through here. Now, if the 500 becomes the support, well, then we can trade that long. So we could also look at being long above that high here for this. So also too, we would need to understand this move up through here. In first view of it, it looks like we could look at it in 5 waves in terms of probably 1 in here, 2 here, 3 to here or to here, and 4 and 5 moving up into this space here. But I've had a closer look at it, and it looks like it's actually just 3 waves up here. So this is not 100 ticks, this is 20 ticks. So in this case here, we can look at this here as, well, I'm viewing it as 1 and 2 here, and 3 here, and 4 here, and then 5 here as wave 1 and 2 here, then 1 and 2, and 1 and 2, and 3 and 4 and 5 here for the third wave. Does leave the fourth wave a little bit small here. So that is a bit of a concern. I'll need to probably double check on that. But then wave 5 here. So from wave 2, so wave 1 and 2 here, and there's 5 waves in here for 3, 4 and 5 for the third wave. But it's possible to call it in there. So what we could do is we could say, okay, we know that this is a dance at the 500. And just while we've got this here as well, we can look at group 2. So 600 is important, 700 is important, but we look at the 12,650 here and the 12,720. And then we go up to the 8 here. That's all of group 2 in that space there. So that's where we're going to get the next difficulty from, especially this number here, the 8. We're just using the Fibonacci numbers as 100, 200, 300, 500, 800. So there will be a Fibonacci relationship between those numbers. So that helps in terms of the geometry of it all. Let's just say for a moment that this wave 5 here is not there, and it's actually sitting on this high here for that. So that would leave us with a retracement level here of down into this point. So I'm just saying that if I've got it wrong, it could come down to here. Now it's important to know where you're wrong, because if we gravitate over to the closest largest number, the 12,350, if that level became the resistance there, then we would know that we would have a more of a bearish picture at that point in time. So that's important. There's a little gap here, of course. So yeah, and this does look, let me just double check that. This does look like an A wave, a B wave, and a C wave down through here. So I can see straight away in the middle here, I can see the third wave here in terms of 1, 2, 3, 4, 5 here. That would be the 5th wave. So in here somewhere, we've got wave 1 in here, wave 2, 3, 4, 5 to that point. As an A wave, a B wave, and a C wave here. This is not looking very chirpy here at the moment as an impulse wave here. I can see that little section's in 5 waves here. I can see that that's probably in 5 waves. That's probably in 5 waves. That's too short to be a third wave here in this instance. So there is a bit of a problem with this particular pattern here. But if I had to go long from here, now that that's fallen out of bed here, then we can also go long from that point there. So that would be the long trade at that point. So we can address that in the other section. So I think with a little bit of patience, we need to just go back to the 100 ticks here for a moment. That's a different page, this one over here. So we know that that 12,350 here is quite critical to the upside. So this move down through here, I mean, we could look at it as an A wave here, a B wave here, and a C wave here for the A wave, and then 3 waves up for the B wave here, because we don't have 5 waves here yet. So that can be 3 waves up to the 61.8% roughly, and then drop down here further for, well, in that case, it would have to be a wave 4 in that case if it was going to drop back down into this space here. Just saying, because it won't be a wave 2 because of this particular structure. A wave 2 would want a zigzag pattern. That would be 5, 3, and 5. Even though this 5 is short, it could still do the trick. But if it gets into this one here, where we've got 3 waves in the first wave here, then it's going to be part of the flat family. So it will be a 3, 3, and 5 structure in this case. So what we can do here is just mentioned, we can go long above that little high here, but we just need to, let's just go to the hourly chart, and so I can draw on that and just make a few things. So what we can do now is we can bring that down to that level, but we also sort of understand that too, that this can be 3 waves up here. So it can be a B wave at this stage. So I'll just put that there as a B wave and possible wave 3 at that point. I know that you trade the S&P more, but we need to understand the Nasdaq if it's going to be leading to the upside. So if it drops below the 350 here, then we would need to be looking at 5 waves down here for this, somewhere down into here, and then up from that point, and we would need to look at that as a wave 4 over there for that. And yeah, all of this can be the A wave down here, the B wave here, and the C wave down here for wave 4. If it takes off this high here, just be mindful that if that's the case, we could get wave 5 here, and then we can have an A and a B and a C wave back here, and then push up from that point. So it's probably likely that you'll get trapped here. So what we could do is just make that, well, I'll just copy that and bring that one over to that point, that high. So we can go long again back on the 500 here. And then if you were going to go long here, and then just make it half a trade at that point, because it is reacting from that 61.8% mark, and we do need to see that 61.8%, as we mentioned yesterday, that we need that as the support in that case there. Okay, so it's not worth going short down here for that, because you'll just get trapped. The other point here is that coming back down into the 200 here, I'll pick this up tomorrow anyway, so we'll be able to work out the best place here, but a tested support back on top of group 1 here, the number 3, is what we'd be looking at this point. So let's go and have a look at the some stocks. So Alphabet's been a bit of a shining light to the upside because it's taken out this high here. Other stocks have done that as well, like Square and so on, but we picked this one, so not to worry. But we've been looking at this on a intraday chart, on a tick chart, but yesterday we started to look at this on the daily chart. And in this case here we have 3 waves to the upside here. So we've got 5 waves in here, and then we've also got 5 waves in here. Now we could label this wave 1 here and 2 here. We could also label it wave 1 here and wave 2 here in green, or we could look at it as wave 3 here and 4 here. If it's going to be wave 4 here, then it can pull back to the wave 4 1 lesser degree, so it's still got further to come down at this point. So yeah, but the takeaway here is that this is positive. The only other count that this could be, if it was going to be really bearish, is putting wave 4 over here and looking at this in this 3-wave structure. Here's a B wave, so an A wave, a B wave, and a C wave down here. But the main point of this, whichever way we look at all of this, is that the market is still in an uptrend. It's still bullish. In the bigger picture, in a weekly or monthly chart, this market is still bullish. So we, even if that was a top there, it could only be a C wave down here because it's not going to finish off in 3 waves here for that. So, yeah. Let's have a look at the next one here, Apple. So with Apple here, a little bit like the S&P and the Nasdaq in terms of an A and a B and a C wave here for the wave 4. We can look at this as wave 1 and 2, which we have been looking at, and then wave 1 and 2 here. So as wave 2 here can pull back 61.8% of that move there. So just be mindful of that. So yeah, we're looking at this in a positive light, and it's kind of interesting that we're looking at this as wave 1 in blue here, and wave 2 in blue, then wave 1 and 2 here in this case. So we could look at the Nasdaq and the S&P in that light there as well. But in this case here, we could also view this coming back to from this low here, we can view this coming back to the 50-60% retracement level in here for that. So we need to be a little bit mindful of that. So could we look at this as a triangle pattern? Possibly, and have this wave 4 sitting over here, because we've been looking at some triangle patterns here, like in Facebook, probably not a very good triangle looking pattern. But this first move down through here can be counted as 5 waves, or it can be counted as 3 waves. So yeah, it always sort of haunted me a little bit, this 5-wave structure here, because that means we'd get another deeper move over here for this. All of this here can be counted as an E wave over to this point here, and we would need to see this basically push up from that point there for this triangle pattern. We could look at this as wave 1 here and 2 here, and then also wave 1 here and 2 here for this as well. This is not displaying a very nice 5-wave structure here, so that's why it's better fitted as an E wave for a wave 4 over here for this. But once again, the takeaway from this is that this pattern here is bullish corrective. So we're still in a bullish trend. So we still expect the Nasdaq to move higher, and also the S&P and all the other markets in that regard as well, even though they're not looking that fantastic. This is Amazon here. So it's also possible to look at this as a triangle, but also in a more positive light. We could look at it. We know that this is corrective here, so we could look at it as wave 1, because we also looked at Google with this as a wave 4 over here for Google sitting over here. So it's possible to look at this as wave 1, but the trouble with that is that it's got overlapping wave structures in this case here. So it's probably the B wave, the C wave, the D wave, and the E wave. And we may be finished here. There may be another little move down through here. I'm not quite sure just yet for that. But I need to take a closer look at that. But it's nice to see it moving up at that particular point. But all said and done, we can go long above that high there in that instance, because we're in the final stages of this particular pattern unwinding for this. So I guess the takeaway for these stocks that we've just been looking at is that that they're not really helping the Nasdaq push higher at this stage, and they're not, and the Nasdaq is not leading the S&P very well to the upside. But I'm thinking once these markets get, finish these patterns, which is pretty much, now-ish, then we're going to see the markets push up higher at that point, and then the indices will push up higher. That's what I'm thinking. Okay, where are we now? We're in the S&P here, so we'll just go to the daily chart first for this. So as you know, I've been looking at this in many different ways, but but I've always been looking at it being bullish, you know. So we've been counting this as 5 waves up here as wave 1 here, but as I've said right from the get-go that I just don't like spikes, you know, and in fact most of the time I just ignore them, and if I do ignore them, if I do ignore this, then we still need to put wave 1 up into this space. Now we could put wave 1 here where we've had it before in this instance, but that means that if I have got wave 2 there, we've got this extra wave here, so that means that I would need to have one more top in here for that. Because we've got 5 waves between this low here and that high here, so that can be the 1, the 2, the 3 here, and the 4 happening here, and then the 5 here. It's hard to put this as wave 3 here like we've done on the Nasdaq. It just doesn't sort of fit very well. So it's probably likely that we can look at this as wave 1 and 2 here in this instance. Look, it's just a theory, and you know, we still need stocks to push up further to take these indices higher at this point. The positive side here is that the market is currently trying to find support within Group 2. So Group 2 is 65, 3,650, then the 72, which in this case is 3,720, and the 8 here. Now the 8's the most important number here, but it's important, these levels are important for the market to find support in. Now it's trying to maintain support in here. Normally I would go long if I get support on 72, which is 720 at this stage, but it's just not sort of getting in there at this stage for that. But we'll see. So we don't know at this stage if we're going to, with the Nasdaq, we're going to make another little low in here, or we're going to make a low for wave 2 in here and then move up, or we've made the low in here and we're going to be pushing up higher at this point. So we'll just need a few tactics in this area here. So we'll be looking at different counts for all of this here. So yeah, I'm sorry there's so many counts. So this was another count that we talked about yesterday as well. It's also fitting as well. It's probably not the case, and it's probably not the case because, I mean, technically it fits because we can look at this as 1, 2, 3, 4, and 5 here, but it doesn't fit in the case that this wave 1 here is much bigger than this wave 1 here, so that doesn't quite fit right. We can look at the move down here as corrective, but also too, yesterday we looked at how we could look at it as an impulse wave as well to the downside, so we'll revisit that today, and we'll also revisit this little pattern in here as well. But the takeaway from here is that this level here, the 3,650, I mean, it's an odd sort of number. I know that most people would look at 600 and 700, and I understand, and they are important, but this normally becomes a balance line here for the 600 and the 700. So what we're trying to see here is if this market finds support here. Now, it had found support here. This top trend line here and the 72 number really pinned it back down at that point. In fact, pushed it back down, but even though it went through this level, it's come back up. So it hasn't found it as a retested resistance at this stage. So if it finds the 3,650 as a retested resistance, well, then it's going to drop from that point. Yes, and it will find some support at 600, and there'll be a bounce on that. But yeah, so we need to see if this is going to hold at this particular point in time here. I'm going to go to the 4-hour chart and look at this particular count here. Now this count here is the count that we've got on the DAX and the FTSE. And I could probably even put the Australian market with this as well. And this is not such a bad idea. And I just, you know, and just once again, if we shaved off that top there, I know that you probably think that's a little bit wild. But that's what news events do. They sort of, you know, because when you look at this here, when this is just from observation from a long time here, all the volume has been traded, you know, in this space here. So this little blip on the radar here you know, needs to be sort of looked at maybe in a different way. So I just really follow the volume where most of the volume is traded out in this regard. So yeah, so we need to be a little bit wary of that. And I could put wave C over here for that, or I could put wave 3 on top here for this one as well in that case. Not this big deal, but anyway, this is the count that we have on the DAX. So, you know, this is viable as well here. So once again, in this case here, the 3650 here, if that becomes the retested resistance, then we're likely to come down further at that point. So that's something to keep an eye on. At the same time, we need to be looking at the bullish side of things as well. And yesterday we did that here. So on the 1 hour chart, we looked at this move down through here being an ABC correction for wave 2 at this low here, and then looking for wave 1 to the upside here, and then looking for wave 2 to pull back to the 61.8% where it is now in this case. So and sitting quite close to this level. So in this case, like we were yesterday, we need to see this push up from that point at this stage for this. So if we also just look at this a little bit closer as well before we go into any further degree of structure here, then just to know that, well, this is the 50-60% retracement level at that point in this move going up through here. So what we could also do here now, just find the next resistance here. Just bear with me for a second. I mean, to me, it's all a game of support and resistance. That's it. And that's how you manage your money as well within all of this. So we're back here again with that. So that's the 50-60% there. So what we can do now is we can look at this price here. We're in subgroup 2 here, 65, 72 and 80 here. Let's see if this becomes the retested resistance here, this 65 number here, and let's see if it gets support back in here. If it gets support in here, then that's a positive thing, and then it needs to get support here, but the 61.8% is on the 80 here. So to go long here now, we would need to see that as the support, okay? Just saying. So we'd need to see a classic trading levels pattern develop here for this, and then we can go long above that point there. We can also look to add to that position above the level, above the 700 as well. In that case, we would also need to see a classic trading levels pattern sitting up here as well. So the same thing would need to see here again, the arrival, the reaction, the first high above the level, some type of correction here, and then up from that point. I'm not saying that's going to happen, but if you see that set up, then as a trader, you need to trade that. There's a difference from being an analyst and a trader. They're two totally separate things. The analyst doesn't really sort of care about the risk so much, where the trader is all about the risk. So let's go in here now and try to understand this point. Sorry for this video taking so long, but hey, you know, I'll just go to the 15-minute chart, just see what I've done there. Okay, yeah, this is important. So yesterday, don't worry about these tops here. We know we're looking at different counts. So we could count yesterday in light blue here as 1 and 2 here, and 3 here, and 4 here, and 5 here for the A wave here, then an A and a B and a C here for the B wave here, and then 1 and 2 and 3 and 4 and 5 down here for wave C. Now these 1, 2, 3, 4, 5, they need to be in the same degree of structure as the light blue one. But point here is that we can count this down as an A wave, a B wave, and a C wave here, making this a bullish correction. Now, it doesn't mean that we can't make a new low here. It does mean that there is an opportunity that the market can just continue up at that particular point, but we just need to be a bit mindful of that. So we can bring that down to, we know that 360 now is the 61.8% from this move down, but we need to understand this move here now. So we can look at that as support there. Yesterday we because the market was here somewhere, we talked about going short here if that was going to be the case. So we don't need that there now, but we can put that over there, because if that becomes the resistance, then you can look to short at that point. So the other way to look at this too is that if we looked at this as wave 1 here and 2 here, and then, you know, let's just pretend I made a mistake in here. We could look at all of that as the 3rd wave here, the 4th wave here, and the 5th wave here, and then look at this as the A, the B, and the C wave up through to this point here. I mean, it went a bit higher than I thought, but still it's roughly in that particular space. So it can be viewed as that. So we do need to understand this move down through here. I think the best way to do that is on smaller than 100 ticks. Maybe I'll see it, maybe I won't. Okay, I can see it, but you might not be able to see it, so I need to just get, that's 100 ticks, so this will be 5 ticks, so you'll be able to see this a little bit better at this point. So I'll just draw this out for you. Let's work backwards. So we can see that we've got 5 waves in here. We can see that that's a nice wave 4 there. We can see that that's a nice wave 3 here for this. Nice wave 2 here, and nice wave 1. So we can look at this here as okay, that makes okay, so that's, this is 1 and 2 and 3 and 4 and 5. So really we've got here an A wave, a B wave, and a C wave at this point. So let me just get that into a bit better shape for you. Now it could play out into a 3rd wave down here. So we just need to understand that. 1, 2, 3. So let's just understand if this is going to be a wave 4 here. So we need to get past this wave 4 here if that's going to be the case. So, I mean, it looks like a nice wave 3 in that, just get that in view for you. So from here, I mean, it looks like a nice wave 3 because it's got, you know, it's big and it's got good structure. So put that here. Roughly. So that's the 38.2% retracement level there for wave 4, and that's the wave 4 of 1 lesser degree. So it's they're not quite evenly matched, but that's how we'd get that space there for that. So and wave 4 also, just to make that a bit worse, we're coming into the close. We know that wave 4s can get complicated. This wave 4 here, that's what we could also get in this space here as well. So I don't know so far. I mean, we can look at that as an A and a B and a C wave here, and we can go straight up from there. So if we were going to go straight up from there, that top there, so we could use that, it's all part of group 2. So we can go to the 2 there, the 3, 6, 7, 2, and that's the 6, 5 here. And that's the 80 here. So we could go long on top of 72 at that point. Because that would be above, if we get a classic trading levels pattern on top of 72, you can get a small position. And then we also know that that's the 61.8% from something before we looked at. So, but we need to support on, you can add on that. Also too, that let's just say for a moment that we get wave 5 down here. So if we get this move down here, we get one more move down, it makes wave 5 here, then what is that telling us? That means that we've got 5 waves down from the top there. So that means that if I go back here, I won't go to the tick chart, I'll go back to my 15-minute chart where we can draw now that we know the count. So now if we looked at this, if we get one more, if this market goes up here and has its little wave 4 here, let's just imagine that it does. We don't know if it will. It may just continue up there, but if it finds that 72 there as the resistance and creates one more low here, then what does that mean? Well, that means that we're going to get an A wave, a B wave, and a C wave back up here to the 50-60%. Let's just draw that out for a moment, down to, I'm just assuming it's this level, but you can do that. That would bring us back up to here, which is about right. And just move these out of the way. So if we get another low, then that will give us 5 waves down from the top, right? So that means we'll get an ABC correction, and that means we're going to be coming down again after that. So what that means we can do means that we can look to short through here. Technically we can short, technically because we've got that 5 waves here, it means we could actually short in this box here because we've got that happening already. So we could short from that box there. I wouldn't overdo it at that particular point, but a small position there, and then one under the 72 as resistance, one under the 65 as resistance, one on the breach of this, retested resistance on this angle here, and then you could also add on the 50 here as well on that side. So summing this up and walking away from this now is that you just chill out. Let's just see if we get that 5 wave structure here. If we get that 5 wave structure here, then you'll know that you're going to get a counter trend and another move down. If we don't get another move down, then technically the safe place to go long at is on the 80, but you could also get a small position on the 72 at that point. And if that's the case, then we can look at this here as wave 1 here, and then we can look at this as wave 2 here, and then we can look at wave 3 moving up here higher for this. And really the open target would be this number up here at the 8 at that point. So there we go. I'll leave it at that. Sorry for such a long video, but anyway,